Chief of the Stock Exchange of Thailand has warned investors to keep a close watch on Europe's sovereign debt problems as there are still no sign of long-term resolution for the crisis. Eurozone finance ministers have delayed a decision on giving Greece the next installment of bailout cash. Bangkok remains at risk of flash floods over the next 2 weeks when the seasonal peak tide is expected, Agriculture Minister Theeravongsamut warned yesterday. Stay with us for 1 hour afternoon global and ASEAN business news update with Ong Anand Amatayakun and Veena Jongprasit in ASEAN Business Report.
Good afternoon. You're now watching ASEAN Business Report. Today is Tuesday, October the 4th of 2011. It's now 12 p.m. in Bangkok, and I'm Veena Jongprasit.
I'm also here with you, Ong Anand Amatayakun. We're still continuing from yesterday the problem in the Eurozone, where Greece is going to default pretty soon, and they're extending the deadline. And of course, the debts and the deficit of Greece is pretty high. They can manage to trim down the deficit only by 2%, from 10.5% to 8.5%. But the bottom has to be 7.6% to get out of this situation.
Well, Europe is delaying its bailout for Greece, and it's not sure whether it can, of course, even though Greece has already announced it cannot meet their target for the budget deficit. So we're going to take a look at the story, but we'll start off today with the stock situation in the region, as Indonesia and Thailand's stock tumbled more than 5% yesterday, leading to the rest of the Southeast Asia lower as commodity-related shares were hit by fears that the global economy as a Eurozone debt crisis dragged on. Local currencies weakened as offshore funds cut exposure to the region. The unresolved problems in Europe, plus the risk of recession in the United States, made investors wary of returning to riskier assets. In the short term, there is still some headwinds, said George Zoner, chief strategist at VP Bank Group at Liechtenstein-based private banking firm. The firm considers the slowdown temporary. Markets, however, are currently more pessimistic, leading to a repatriation of foreign stock market investments, he said. Late selling, fueled by falls in European stock markets, swelled losses in Indonesian and Thai shares to 5.6% and 5.1% respectively. Singapore fell 2% and Malaysia 1.4%. The Philippines finished down 3.4% in light turnover of just a third of the monthly average. Vietnam closed down 1.3%. Thailand and Singapore had more active trade, with market turnover rising to 1.5 times and 1.4 times their 30-day averages. Manila posted a $6.2 million in foreign outflows, and Indonesia had a $60 million. Stock exchange data showed Malaysia had a $42.7 million in outflows. The region extended losses suffered in the July-September quarter, the worst since October-December 2008 during the global financial crisis after the collapse of Lehman Brothers. World stocks also kicked off the final quarter of this year sharply lower as concern grew that a broad Greek debt default may be in the works after figures show Athens would miss a deficit target. Commodities-related shares let looser amid a weak outlook for demand and prices. The Thailand's top energy firm, PTT, sank 6.2% in the lowest in more than a year. Malaysia's Petronas Chemicals dropped 1.4%, and Indonesian coal miner Adaro Energy slid 6.4%. The Stock Exchange of Thailand, or SET chief, has warned investors to keep a close watch on Europe's sovereign debt problems, as there are still no sign of a long-term resolution for the crisis. The SET index suffered another blow yesterday, plummeting 46.90 points, or 5.12%, to 869.31, on concern over Greece's likely to default on its debt repayments.
Turnover was 26.64 billion baht. With a Greek default becoming more and more likely amid reports the country will not meet its deficit reduction targets, markets are being driven down worldwide. SCT President Jarampon Chotikasatien said the Thai exchange had fallen in line with other markets because of the continued uncertainty over a permanent resolution to the Eurozone debt crisis, with the absence of such a development souring the region's recovery. He urged investors to monitor the situation in the EU closely and continuously, as the extent of damage to stock markets remain unclear until a way can be found to end the EU's sovereign debt crisis. Capital could flow out of the Thai stock market in the short term, as investors are still concerned over the Eurozone economy, which remains at high risk, said Sombat Nari Wuttichai, Secretary General of the Securities Analysts Association. However, Thai economic fundamentals remain strong, and investors should wait for the right time for stock accumulation. It is quite difficult to make short-term profit. However, dividend stocks and gradual LTF or long-term fund accumulation are suggested for the long term, as Thai economic fundamentals are still strong, Sombat said. Meanwhile, Jarampon conceded that the SET demutualization plan had been postponed indefinitely on the instruction of Deputy Prime Minister Kitirat Naranong 3 weeks ago. The postponement will also affect legal amendments concerning securities and demutualization due to be forwarded to the Capital Markets Supervisory Board, which is expected to be established soon.
So on the EU focus today, we are talking to HSBC Chief Markets Strategist in Thailand, Mr. Parson Singha, on the line with us today. สวัสดีครับ คุณ Parson.
สวัสดีครับ
Yes, คุณ Parson, the EU leaders seem to have no solution, a definite solution for the problems in the Eurozone countries as the crisis continues on, and especially with the banking crisis, particularly in France as well. So when do you think the situation will bottom out?
Well, there's still so much stuff that needs to be done. So it is difficult to see any solution being in place before, say, November. Like most immediately, of course, Greece needs to get some more money. But the more important issue also is that the Europeans, they have to agree on some very big new measures to protect the larger countries from contagion. For example, they might have to raise the size of their rescue fund. They might need to inject more capital into the banking sector. And the problem is these are very political issues that would require a lot more negotiating. That said, there are a lot of EU and G20 meetings that will take place during this month, during October.
That's right. Mm-hmm.
So even if there's no final solution at these meetings, hopefully if there are some positive developments along the way, that might gradually provide some support to the market and help reduce the extent of the crisis.
Mm-hmm. Well, the crisis in Europe has led the Thai authorities to revise Thailand's gross domestic growth. Now, how is the Thai export sector going to be affected by the slowdown of demand for Thai goods?
Well, the European Union is the market for about 11% of Thai exports, but around half of that is to Germany and the Netherlands. And these are actually the two most stable countries in Europe. The exports to the badly hit countries, such as Greece, Portugal, Ireland, these are very, very small. So actually, I think that for Thai exporters, the bigger worry would be the downturn in the United States. And that issue is being overshadowed by Europe right now. But it is a pretty big story in its own right.
Okay, what is your expectation of Thai GDP this year, and especially the Thai baht, where we've seen in the later half of this year that it's moved from 29 baht level per dollar up to now 31 something?
Yeah, well, similar to the central bank, we're currently revising our forecast, and the figures have not been completely finalized yet. But it does look like Thai GDP growth should remain pretty reasonable, say at around 4 to 4.5%.
Okay.
The Thai baht is caught up in these very, very big global flows at the moment, and as long as this crisis continues, there should be further flows back to the U.S. dollar. Also, the year-end period around December is usually pretty inactive. So it's difficult to see a major recovery in the baht in the next couple of months. But ultimately, we do think that the fundamentals for the baht remain pretty good. There is a current account surplus. There's decent economic growth. So there should be drivers for the baht to strengthen, but these drivers might not take place until, say, early next year.
Now, what measures should Thai authorities take to ensure stability and growth in Thailand?
Well, we have to rely more on local factors. It should be a good time to promote more investment by both the private sector and the government. That's because interest rates remain very low, and overall debt levels for both the private sector and the government are still not very high.
Okay, well, thank you very much, Kun Parson, for sharing with us today.
Okay, thank you.
Thank you very much.